Let me ask you something that sounds simple. If I told you that you were worth $1 trillion, what would you do? Buy a private island, fund a mission to Mars, pay off your entire country's debt? Because that's what the headlines tell you about Elon Musk. They say he's a trillionaire, the world's first, and honestly, the number is so big it stops making sense. A trillion seconds ago, humans hadn't even invented writing. But here's the part nobody talks about. Elon Musk himself admitted that he has less than 850 million in actual cash. On a net worth of over $1 trillion, that is 0.1%. So today, we need to have a real conversation. Because the way the media reports billionaire wealth is either deeply misleading or they genuinely don't understand how money works at this scale. So let's fix that. Part 1, the number that broke the internet. So here's what actually happened. In June 2026, SpaceX went public. When it did, the valuation on the company hit $2 trillion. Musk roughly owns about 43% of SpaceX. Do the math. That's nearly $1 trillion just from SpaceX stock itself. Add his roughly 19% stake in Tesla, a company with a market cap around $1.6 trillion. And you're adding another couple hundred billions on top. Then you got XAI, his artificial intelligence company. After merging with X, the combined entity is valued at over $1 trillion. Musk roughly owns half of it. And then there are smaller bets like Neuralink, the boring company, which are harder to value, but not nothing. So by the time you add this all up, Bloomberg, Forbes, everyone with a calculator agrees Elon Musk crossed $1 trillion in net worth. And then what? The internet lost their mind. News anchors looked genuinely shaken. Tweets went viral. People compared it to the GDP of entire countries. And all of that? Well, that's completely understandable. But here's the thing they weren't telling you. And this is where it gets interesting. That number, it's not money. Not in a way you or I would recognize as money. Part 2. What net worth actually means. Okay guys, let's go back to finance class. But I promise you it's not boring. So what is net worth? Net worth is a simple formula, assets minus liabilities. If you own a house worth $400,000 and you have a $300,000 mortgage, your net worth from the house is $100,000. Now, can you spend that $100,000 today? Absolutely no. Not without selling the house, paying off the mortgage, dealing with the real estate fees, taxes, and waiting weeks or months. So, your net worth exists, but it isn't accessible. Now scale that up to Elon Musk, and you start to see the problem. The vast majority of his wealth, we're talking about well over 90% of his wealth, is held in company stocks, equity, and shares. Tesla is publicly traded, which means in theory you can sell shares daily. But here's the catch. Musk holds about 717 million shares of Tesla. But if he suddenly started dumping hundreds of millions of shares, two things can happen simultaneously. One, the stock prices craters because the market sees a massive sell-off and panics. Two, the SEC gets involved because insider selling at that scale has a serious legal implications. You have to file a paperwork. There are blackout periods. There are various rules. So even his most liquid asset isn't really actually liquid. Now let's talk about SpaceX. Until very recently, SpaceX was a private company. Private. That means there's no stock exchange where you can sell your shares tomorrow morning. You have to find a buyer, negotiate a price, get board approval, deal with right of first refusal clauses. And it can take months, sometimes years. And XAI? Also not publicly traded. So what Musk actually has in cash, by his own admission, is under $850 million. That sounds like a lot, and it is. But it's barely a rounding error on his stated net worth. $1 trillion number is real in an accounting sense, but spending it is a completely different story. Part 3. How do billionaires actually access their money? Alright, so if Musk cannot just withdraw $1 trillion, how does he pay for things? How did he buy Twitter for $44 billion in 2022? Because this part is genuinely fascinating. And it is a strategy that most people don't know exists. Billionaires borrow against their stock. Let me say that again because it matters. They use their shares as a collateral for loans. Here's how it works. You go to a bank, say Morgan Stanley, and you say, I have $300 billion worth of Tesla stock. I would like a $20 billion loan, and I place my shares as a collateral. The bank says, sure, because if you don't pay back the loan, they take the shares. Now you have $20 billion in cash, which you can actually spend. And you paid essentially zero tax on it because you didn't actually sell anything. This strategy is sometimes called buy, borrow, die, and it's completely legal, widely tax efficient, and almost exclusively available to the ultra wealthy. Musk has reportedly placed over half of his Tesla shares, at times up to 57%, to back his personal loans. The Bloomberg proxy filings from 2025 show a $3.5 billion loan secured against that collateral. And that's how you access wealth without actually selling your wealth. The downside? If the stock prices drops far enough, the bank can issue what's called a margin call, basically forcing you to either put up more collateral or sell shares to cover the loan. That's a scary position to be in if the market turns against you. And for Musk, they sometimes do. In early 2025, when Tesla stock fell around 27%, his net worth dropped by roughly $130 billion in about just 2 months. $130 billion gone in just 2 months. Not gone forever necessarily. Stock recovers. But the point is, this wealth isn't stable. It isn't guaranteed. It breeds with the market. Part 4. The illusion in action, how the number moves. Let me give you a real example of how unstable this all is. December 2024, Musk hits an all-time peak of about $486 billion. SpaceX valuation had just jumped. Tesla was flying. The Trump election gave markets confidence in his regulatory future. Everything was aligned. Then in January 2025, he takes a White House role, gets involved in Doge. Tesla starts feeling the political heat. Consumers boycott, sells dip, and stock drops. By February 2025, his net worth has slipped to around $250 billion. That's a loss of roughly $230 billion in just 60 days. For context, $230 billion is more than the GDP of many countries. It's more than the value of Nike, McDonald's, and Boeing combined. And yet, his lifestyle didn't noticeably change. He didn't lose his rockets, he didn't lose his houses, and he didn't even have to cancel anything. Because the loss wasn't in cash, it was in perceived value, numbers on a screen attached to the shares he never sold. Then the stocks recovered. Then it dropped again. Then SpaceX went public and it all shut up. This is the nature of a billionaire wealth. It's not a savings account, it's more like a scoreboard. The numbers change every second the markets are open. And that brings us to something most people don't want to hear. Part 5. Is the $1 trillion title even real? Here's where I want to be honest with you, because this isn't a story about Musk specifically. It's about how we think about money. The $1 trillion figure is calculated using current market prices for his holdings. But the market price of a stock assumes that every single share could be sold at the price simultaneously. And that is never true, especially not for a founder who owns 43% of a company. Economists have a term for this. It's called market impact. The moment you start selling a massive position, you drive the price down. The first million shares you sell might be at around $200, but by the time you're selling at 10 millionth, the price might be $140. So the true liquidation value of Musk holding, what it actually pocket if you try to turn everything into cash, would be meaningfully lower than the headline numbers. Then there are taxes. In the US, capital gains tax at the federal level alone sits at around 20% for the long term holdings. Some states add more. You'd also own the appreciation of the shares you received as compensation. So, if you're being realistic about what Musk would actually walk away with after selling everything, paying off debts, and clearing taxes, the number is still almost incomprehensibly large, but it's not a clean $1 trillion. So the headline number is the best case, no friction, sell at today's price version of reality. But real life has friction. Part 6. So why does any of this matter to you? It matters because the way billionaire wealth is reported shapes how we think about money, capitalism, and economic inequality. When you see Elon Musk gained $62 billion in a single day, yes, That was real. It happened in December 2024. It sounds insane. It sounds like the system is broken. But gaining $62 billion in a day doesn't mean a $62 billion bank transfer landed in his account. It means the market decided that his shares were worth more, and the market could decide the opposite tomorrow. Now, I'm not saying inequality isn't real. It absolutely is. The wealth concentration in the hands of a small number of people is genuinely a serious issue worth discussing. But conflating net worth with cash wealth leads to a bad conversation and bad policy. It's the same mistake people make in their own finances. Someone might own a house that's gone up in a value and they think they're rich until they realize they can't access the wealth without selling the home they live in. So, the lesson for your own life is net worth and liquidity are two completely different things. You want both, but they are not same. A high net worth with no liquidity means you might be wealthy on paper, but still struggling to cover an unexpected expense. This is why financial planners talk about emergency funds, about keeping some portion of your wealth accessible and not having everything tied up in one illiquid asset. Musk, in a weird way, is an extreme version of a trap people fall into. All wealth tied up in one thing, not enough cash on hand. The difference is he's one thing. He is worth $1 trillion, so the downside is more forgiving. But for the rest of us, it usually isn't. So let's bring this back to where we started. Elon Musk, by math, is a trillionaire. The number is real in a sense that it reflects the current market value of his holdings. But he cannot just walk into a store with $1 trillion. He cannot wire it to his bank account. He cannot spend it without a complex series of financial moves that takes time, costs money in taxes, and move the very market that created the number in the first place. His actual cash, under $850 million, is less than 0.1% of his stated net worth. That's not a criticism of Elon Musk. That's just how this type of wealth works. The real takeaway? The number that matters isn't what you're worth on paper. It's what you actually access, deploy, and use. So, the net worth is a score, and liquidity is the game. And the next time you see a headline saying a billionaire gained or lost billions in a single day, you'll know exactly what that means, and more importantly, what it doesn't. If this video helped you understand something about money they don't teach you in school, please drop a like, comment, and share it with someone and subscribe. We do this kind of deep dive finance content every week. Thank you for watching. I'll see you in the next one.